Hi, welcome back to Stock Talk. This is Joe Rabil with Rabil Stock Research. So today's lesson, to start off the show, I'm going to go into MACD and I'll give some details that I think, most people looking at MACD, I don't think realize. All right, I wanted to get into this because you need to treat MACD like an oscillator. Let's go ahead and look at the agenda. So it's to me, it's pretty important details that you have to understand with any oscillator, which MACD is. I'm going to show how oscillators should be used in uptrends versus in a neutral trend. All right, there's a difference there. And then there are three different ways you can get signals near the zero line. I want to talk about that. And then I also want to look for combinations of MACD combinations as well as combinations with ADX. Once we're done with that, we'll go through the stock requests that came through this week. All right, let's get going on the lesson. I've got two charts of Microsoft up with a weekly on the left and a daily on the right. I want to focus in on the daily mostly here on both charts I'm going to use today and explain how we use the MACD zero line. Now, this could be any oscillator. Now, remember, MACD is an oscillator. It is an overbought, oversold oscillator. So if we just take this chart and scroll it back, scrunch it down, we can see an oversold area here and an overbought area up here. All right. Now, it's different for every stock. If you use PPO, then it might be a little bit more uniform, but I've always used MACD, and it's hard for me to change because I have had so much success with this particular indicator. But what I want to point out here is when we get stretched away from the zero line in either direction, we should be looking for reversion back to that zero line. Now, with any oscillator, I'm just going to draw a neutral line here. Oversold, overbought. Any oscillator like RSI, stochastic, anything like that. When you're in a strong trend, if you're in a bull trend, like this is a pretty strong bull trend, you're not going to get an oversold reading. All right. What you're trying to look for is a move from overbought back to neutral. All right. That's what we want to look for. And there are several patterns in MACD that will show up. Sometimes they'll come down and just slightly overrun the zero line. There are other times where it'll just come down and literally kiss and go, right? And then there's another one that I call flyby, where you come down and you get close to it, but you don't actually reach it, and you just kind of fly by the tower, you buzz the tower, right? And then you turn to the upside. So any one of those three qualify to me as a zero line reversal pattern that we need to be on the lookout for. Slight overruns typically don't show overrun in the signal line. You just get a little overrun in the MACD itself. Now, if both lines overrun, to me that's a little bit more serious, and that means it typically takes a little bit more time to turn things back around to the upside. But if you think about it, the strongest condition in place is this flyby pattern, right? Where we get a pullback that doesn't quite reach the zero line. So what we've done is we had a massively overbought condition, strong, which is a sign of strength, okay? And then we get our pullback that offers a neutral conditioned oscillator. And that's all we can look for. If you're waiting for this in an uptrend, you're going to wait a long time. It doesn't typically happen. It will happen periodically, but usually that's taking place because the market's really getting hit and you had a really strong trend in place in the stock and it's being pulled down by the market. That's the only time I ever really see a oversold reading in one of these oscillators. And again, I do view MACD as an oscillator. So what we're trying to find are these zero line reversal patterns. And if they come down near this level and they've worked off, now one of the things you can look for, there's two things. I'm going to show you one example of this low ADX condition where we go through and you can see we've clearly gone through a consolidation phase in the chart, right? I mean, it's not just a simple pullback. It's actually consolidated. The MACD has come down, but how do we know if it's come down enough? Well, what I like to look for is a move where the ADX drops down below 25 and below the other two, the DI lines. Once we have that, then this oscillator, which was up around 60, has now worked off its overbought condition, and it's actually down to a low condition. All right. So if we can get that combination, that's actually really nice, where we get zero line reversal or a flyby in this case, and a low ADX. All right. So that's a really nice situation. Now, in my course, I go through all these different condition potentials and the way the price pattern plays out with the moving averages. And I give you, there's 4 different trigger methods. All right. In this particular case, the trigger would be just breaking the trend line, and you'd get in the moment it breaks the trend line. Let me give you a different example. Let's look at Netflix, and we'll start out. And I do want to point out in both cases, so we do want to look at the higher time frame. In both cases, the higher time frame formed a pinch play. I didn't show that on Microsoft, but this actually formed a pinch play on the weekly. This has rising ADX with a lot of strength in the buyers. The green is showing the strength in the buyers, and the ADX is moving up. And if you notice the way this played out, we got the same sort of situation, a flyby pattern. Okay. Now there's a couple other things that make this even more attractive. Let's just zero in on this. In fact, let's zero in on the daily now. Is we had this making a higher low while this was making a lower low. So lower low here and a higher low here. So that's reverse divergence. Now, when we actually got the zero line reversal, we made another layer of reverse divergence because this made another higher low and this made another lower low. Now, if you think about it, the ADX did not get too oversold, but if you notice, we had a very powerful double reading to the upside, really, really strong. So just getting back to the 25 line in this case, to me, is enough. All right. Now, ideally, you'd like to look for the oscillator or the MACD to come down to the zero line and kiss, right? And the ADX to come down below 25 and below the 2 DI lines. All right. If we get that, then we kind of have our true setup. But the world doesn't work like that. It's not like you're going to get that setup every time. If you think this is going to pull down and give you the perfect situation, in this case, this was so strong that it not only did the MACD not drop down, but this also didn't drop down. All right. Now, this was a little bit more difficult. Maybe the only way you play this is with options, but you know, the pattern itself, I think, is worth watching for. You'll see this happen a lot, where MACD will make a lower low while price is making a higher low, and we're working back down to the zero line. And again, I call this as a flyby pattern. So now one of the questions that'll come up is that, you know, how do you enter this? I would go down to the smaller time frame on this pullback. I would be looking at this on an hourly chart, looking for entry here over the course of the two days. Now, again, with the earnings coming, it makes it a little bit more difficult. And you know, the Microsoft trade, you do the same way, although you don't necessarily need the hourly in this case because you're getting a trigger 1 here. You don't have to go down to the lower time frame. You can if you want. And you might actually get a little bit of a jump on the trend line break doing that. But the point I want to make here is that in this case, we don't have earnings problems. We can actually play this without any real issues. So either way, be on the lookout for this situation where the MACD comes down, but not all the way down, working off the overbought condition, coming back down to neutral. All right, let's move on. If you're enjoying the content, hit that like button and also subscribe. Now, my research can be found at rabelstockresearch.com. The courses, I'm actually adding a 3rd course to the bundle that I'm going to release sometime in the next few weeks. If and when I release that, I am going to change the pricing. So I just want to make you aware that prices are going to go up on the overall courses. And then if you have an interest in just starting out and learning more about the approach, I would suggest going with the book. You can go to rabelstockresearch.com/book for more information. As we move into the analysis here, I do want to show you something I really like about the ACP program. One of the things I find myself invariably sometime in the first half hour every day when the market opens looking at this market summary page. I've just find it to be an easy way to go and find everything that I'm looking for all at once. I can see based on this little heat map whether growth or value is leading the way, or whether it's small cap, strength. And I can also see these indexes, and we can just take a look, and you can click on any one of them. You can see this index, the Dow Jones, which I believe has the best look to it, especially when I start looking at MACD and ADX. The position it's in, I think, is pretty attractive. Now it needs a pullback, but I do think that looks good. Let's take a quick look at the Nasdaq 100 because I wanted to show you something here. So if we look at the weekly chart, we still have pretty good relative performance taking place on the weekly, right? This is the relative line. The black line is relative to the S&P. So when it's moving up, that means it's outperforming the S&P. When it's moving down, it's underperforming the S&P. Now, let's just look at this. If we start to switch the time frame, look at what's going on the hourly. So we've actually got a situation where the trend has shifted on the short-term time frame. We had a break of the trend. We also have a zigzag showing the price structure where you made a low, and then you made a lower high, and then a lower low, another lower low, lower high, and then another lower low, which essentially switches the trend to the downside. And then we've also made another lower high and another lower low. So we've basically got a confirmed trend now to the downside. Now, what I would be doing, and then the other thing you can do is actually draw in your trend lines here and recognize that we had our 1, 2, 3 to the downside with confirming evidence. And then we can draw our trend line to the downside now and then look for the reversal coming back up. So this is how I go about doing this in multiple time frames. Now, I did skip the daily chart, which isn't showing any real problems at this point. We're sitting on the 18 right now. See how that handles that. But just looking at the weekly, it's not really showing any real signs of damage being done. The damage that's being done is on the short-term time frame, or even what I would call like a micro time frame on the hourly. So you want to keep that in mind when you're looking at these charts and seeing these big red bars on the daily chart, and see if it's really having an effect. It's not really having that great of an effect. Now let's look at the S&P 600, and I'm going to look at these charts rather than going through the IWM. So again, we can look at this and see that we've basically broken this downtrend. We're kind of testing support. What's missing is confirmation here. We tried to break, and we have broken the downtrend line. But now we're testing. We need this to turn up, and I'd really like to see this moving average turn up underneath. If we get that, then I think we have a lot more potential for this to climb higher. And I keep repeating myself. I like the look of this pattern. I like the zero line reversal on the monthly. But it's really tough to get overly bullish on the environment to just say, all systems go, running on all cylinders, unless you can get some better strength out of the small cap. We need more than just the big cap stocks going up. I think I'd like to see some broadening effect. Now, we are seeing some different sectors starting to participate, which I think is good. I think these are the types of things that you can use this program for. And I go in here and just look at the ETFs to see what's going on. Yesterday, it was clear they were selling communication and technology, and consumer discretionary took the brunt of the selling yesterday. Today, it's a little bit of a mix. We're getting a little bit of a comeback in those areas today. So we'll just have to see. But, it's just nice to be able to go through and look at the bonds. If I'm looking at equities, I can look and see what the 10-year is doing. I can go and look at the commodities, see if gold and oil are doing anything today. So a good little functional tool here on this program. All right, let's start getting into the individual symbols now. And I want to start by looking at this XBI, the biotech ETF. And you go through and look at the components of this. There's some impressive looking names in there, starting with something like ABBV, which has had a really good start to the year following a strong finish to last year. But look at the way this is forming. I mean, this is a nice looking little basing pattern, and the volume improving. We're getting ADX to kick in. We're getting the MACD to turn up. And one of the things I'll mention with the MACD, with the MACD is that if we got strength to the upside, it'll normally show in when there's separation between the MACD and the signal line. And what that allows for, it allows for a decent sized pullback without causing it to cross through the signal line. You see what I mean? So if we have strength to the upside, you're going to see air between these two lines. All right. The more air you have, the stronger you have in terms of momentum to the upside. So I talked about it earlier being more of an oscillator, but there's two components to MACD. MACD is also a trend tool, momentum tool. And we want to keep that in mind when we're looking at this line relative to the signal line. So there's a lot of strength here. What I think I would like to see this do is maybe consolidate a little bit more and then work its way up through this key level at 90. If we do that again from here, I think that would be very bullish for this area. Okay, let's look at Oracle. I had a question about this, and look at the way this monthly is set up. So we had nice strength to the upside. We got that separation I was just talking about, and we've gone through a corrective pattern, and the MACD line has just worked its way back down to the signal line. So far, this is actually pretty orderly in the way it's playing out on the monthly chart. And there's a massive amount of support at 100, which it came down and tested twice now, you can see on the weekly. But look at what the weekly has done. The weekly had this line way overdone, this line way overdone, and look at how this has worked back to the zero line, right? So this is I would kind of call this like a kiss and go pattern. You see how we come down and basically kiss this line and then turn back to the upside. And we do have reverse divergence. This is making a lower low. This is making essentially a double bottom or slightly higher low. So I think this is something you could be looking at, and really you could have bought this on the trend line break, or you could wait for some kind of a higher low to form. I think this is a pretty attractive look, especially now on the daily chart. We're forming this little higher low. So stock's having a really good day today, and has held up pretty well. Yesterday it was down, but it really wasn't a lot of volume. All right, let's look at TKC. So look at the monthly chart on this, because we've been watching this thing drop and drop and drop, and now all of a sudden it's starting to find support at the 18. So we break the 18 back in 2015, right? We rally above it, and then we can't hold it on a pullback, all right? And we try and get above, try and get above, try and get above, try and get above, right? And then finally get above, and now we hold on a pullback. This is the first time this has happened since 2015, all right? We have evidence of respect for the 18-month line. We also have the first time since 2015 that both MACD lines have worked up back through the zero level. I mean, I think these are really important. I think they're really important. Now, in terms of entry, probably would like to see some type of a little pullback on the weekly chart to get this a little closer to the 18-week line. But this overall is a really nice pattern. Maybe we can get a little bit of a pullback on the daily chart that gets this a little bit tighter to the weekly support, which is around $5. That's what I would be looking for there. But yeah, this looks very attractive. CNQ. So yeah, this is holding up really well relative to energy. My concern is when you look at the oil chart, it has to get through a little resistance here around 77, 78. I don't know that and it's tried to a few times. We need to see it through that before I'd be willing to go too aggressive into energy, frankly. This would be one I'd be keeping on my watch list, and I'd be watching and seeing. Now, if this sets up, let's say this moves up and turns up like this, and gives us some form of improvement on a momentum basis and all that, then I think I would consider it. I mean, on the weekly chart, we have been working off. The MACD is starting to work down towards the zero line. We already have low ADX. I kind of view this as a reverse divergence pattern here, because we are making a higher low and this is making a lower low. It's just a little awkward because you kind of want to see this probably take out these highs. So it's not a situation that I think I'd want to be aggressive on unless I saw some improvement on the daily chart. But yeah, I think this is one you got to keep on your watch list. You got to be thinking long here. I wouldn't be overly concerned about this unless it took out 60. If it breaks 60, then I probably wouldn't want to be here anymore. Okay, let's look at Tesla. So, question asked with respect to Tesla playing this as a potential short. All right, now there was no time frames asked on that. All right, and so I'm going to go through the different time frames and how I look at this. See, I look at this as a big spike low with massive support at 100. They got a really strong move. The stock went from 100 to 300. All right, so from 100 to 300, if we take the midpoint of that, it's around 150. I think there's probably room for this to drop down to 150, the 50% retracement. But the MACD on the monthly chart and the low ADX, right? This is just walking along the zero line. This is not overrunning the zero line or anything like that. And we have a low ADX condition. The volume pattern is not bad. So I would be cautious about getting too bearish. Now, if I look at this on the weekly chart, the only way I can really play this off the weekly, I mean, I guess I could have tried to play this as a breakdown pattern, but I don't like to do breakdowns when you're down one. So that was a down week, right? Down week, down week, down week, down week. So 5 weeks down. If we're down 3 weeks or more, I don't like to do the breakdown pattern like that, right? I mean, it's just too much. You should be expecting some kind of a retracement. Now, if you got a light volume, very orderly retracement, a little bit closer to the 18 week, then you might consider it. But keep in mind, this is right around the zero line as well. So we've got both the weekly and the monthly right around the zero line. So you got to be careful here, play it on the short side. The funny thing is, the only real pattern that's setting up, this is actually forming an opposing trend pattern on the hourly chart. We got back to the zero line with low ADX. So these patterns, as I've said, on the MACD, this is a zero line reversal pattern, right? This is the bearish version of it, and it's a flyby. It didn't quite make it there, all right? And we have low ADX. So it's happening to the bearish side on an hourly chart, and the only thing I don't like about this setup is that there's distance between here and the 18-day. So maybe if this kind of works its way back up a little closer to 200, you get a second entry or something like that on the hourly. I mean, maybe. But I would be a little bit more careful about trying to do this. Just seems like there's a lot of underlying support and a lot of volatility in a stock like this. If you got a definitive signal off the weekly, the daily will probably be an ABC up. All right. And that's going to take some time, something we can watch. SQ. So let's just start with what's taking place on the monthly, because I think we always want to look at the monthly. So we have this backdrop, this feeling of what is this helping the trend or is there weakness coming? And if you look at the way this played out, we got this big drop and then we consolidated and we went to a new low here and dropped under 50 and undercut and then rallied. All right. But look at what MACD made a higher low. It diverged. ADX could not go to a new high above 25. So I think there's a reversal developing on this time frame. And if you go and look at the weekly chart, it's actually starting to look kind of interesting. We had that undercut pattern. Now we've rallied up and now we've found support here. I mean, I think this is worth considering, especially if we get an opposing trend buy. Now I'm referring to this opposing trend signal. This is right out of my course, but when we look at this, the 18 is below the 40. So we've got the opposite going on that's taking place on the weekly. So now we look for some kind of a signal back to the upside as a potential buy signal. I think taking out the high from 3 days ago, if we could do that, I would consider that a buy signal off the weekly and off the daily into the weekly. So in other words, we're using the daily chart to get us into the trend on the weekly. That's how I use the multiple time frames that way. And I know I've got a turn developing here. So to me, it's worth a shot. Let's take a quick peek at eBay. So eBay is a lot earlier in the process. We've got the same thing, big decline, rally up, came down. We didn't make a lower low. We're kind of trying to saucer around here, but we've got resistance at 43 from the 18-month. We need to get through 43. But we've got somewhat of a low ADX condition. I think if this can turn up from here, we got to sort of respect what's going on. This big kind of basing pattern. We've been going sideways for a long time. Definitely something to consider coming up through 43, 44. Maybe keep an eye on the daily for entry. Thanks for watching today. If you have any stock requests, send them to stocktalk@stockcharts.com. And if you want to learn more about MACD and ADX in multiple timeframes, my YouTube channel is called Invest Like a Pro. Have a great week, and we'll see you next time.